Welcome everyone. Today I will be doing a video about trading or some leverage trading. In theory, you could also do spot trading. I will be using a platform called BITUNIX in this video. Uh, BITUNIX is an exchange. It's an online exchange. I think it's pretty user friendly. It has a lot of features. It's a smaller exchange for now. But that does mean it usually has a lot of coins or tokens, and especially some with a lower market cap. So the waves they make are bigger, which we want because the bigger the waves, usually it's a little easier to trade. It can also work against you, of course. Um, Other than that, it features some deposit bonus, either in cash or you get lower trading fees, which is always nice if you do want to trade and you can grab a few bonuses like this. Especially since they're a bit of a smaller exchange, they tend to offer a bit more than the bigger ones, especially the new customers. So, yeah, I mean, if we can take advantage of that a little bit, why not? Um, One of the biggest benefits I'd say they have is that they do not require any KYC or a VPN to spoof your location. KYC means know your customer. Basically means you have to upload your ID, and if you're in a country which would normally block it, uh, you wouldn't be able to trade on it. And in this case, you could. Not saying you should, just saying you could. Um, I will mention though, I am not being paid by them whatsoever. Uh, I'm just using my own funds to trade on it, and I've liked the platform. So for case of this video, I figured I'd use that. If you have your own exchange, that's fine as well. The process is usually the same. Some features are a little different, but overall it should be pretty much the same. All right, so let's jump into the rest of the video. Um, I will mention once more before we jump into the rest. Everything I do is my own trades, my own money, my own funds, my own ideas. Please don't just blindly copy what I do. I wouldn't. I'd recommend you trade on your own if you want to trade. If you don't want to trade, that's completely fine as well. If you just want to learn some of the terminology, that would also be good because I will be talking a lot about the terms we see, the letters. There's the shortenings. I can't really figure out the word. But I will just be going over terminology as well. So yeah, either way, for everyone, there's something to learn here if you don't know it already, of course. Um, like I said, don't blindly copy what I do. I'm not a financial advisor or whatever or an expert. I don't claim to be. I'm just a guy sitting in his attic and trying to find ways to make money online. All right, let's jump into the rest of the video. All right, everyone, here we are on BitUnix on the chart. This is the BTC USDT chart. I will be using that because for the purpose of this video, BTC is an excellent way to trade. Sadly, I took too long on the reshoots to catch this little move down. This is what I was looking at trading, but we missed that. But let's just take care of the terminology first. Do have a little cheat sheet because that's mainly because I don't want to forget anything in the explanation. All right, so we see our chart here. First thing you will see, at least on BitUnix, is this widget here: market buy, market sell. You can close that because I don't want to. I don't recommend using market buys or market sells at all. I will get into that a little while later. I don't recommend buying market prices at all because you end up either paying too much or you get wrecked on the fees, because if there's high volume, the fees go up. And yeah, just the first thing you need to do, close it. Don't use it, just close it. Looks a lot cleaner as well. We're on the 15-minute chart now. We'll get into that a little bit later as well. Let's first look here. Now we see here isolated cross. Now, even one of the better features is they explain what it means. Cross margin, all available funds in the future accounts are used. So if you open a trade, let's say you have $100 in it in your futures account, and you use cross and you open a trade for $10. If that trade goes south, if it goes in the red, it will start using the other funds you have in your futures account up until you are like 90% overall in the red, and then they close it, which will basically liquidate your entire account and leave you with 10%. Now, we don't want this, of course. I wouldn't want it. I use isolated margin. So I open a trade and I know what the maximum amount I can lose is at all times. I like to open small and open multiple positions, multiple entries. That way I can spread my risk on the opening of the trade. I will get into that a little bit later as well. But the only thing I really recommend is trying to use isolated margin over cross margin just to protect your assets. Someone once told me, as long as you protect your assets, you will eventually be able to make money on those assets. If you stop losing money, eventually you will gain money. That's the general idea. So I like to take as little risk as absolutely possible, and then maybe scale up here or there, but don't go cross and use 100x leverage and let's go. Obviously you can be lucky and it'll work, but trust me, eventually it'll go south and you lose everything. I used to be big on forex trading, and I've had that which uses cross leverage as well, sort of. But I've had a few blown accounts, and yeah, it's not a good thing to happen. It's not a happy time. Costs you a lot of money, and you have to start from scratch again. So I stick to isolated margin. Right next to it, we have the leverage. Currently, I'm on a 6x leverage, very small, very safe, very good to begin with. At least you can always up that leverage. If you manage to get some profits, you can up it and gamble a little bit more. But once again, I do that with profit, not with my base funds. Like 125x leverage is insane. If something moves 5%, you wipe your entire account. If you also use cross margin. But let's leave it on 6x where it was on. As you can see, available funds. I don't have a lot of money on this account. Also because I'm still using a little bit trial and error, just playing around with it. I'm not very big on leverage trading myself. I do it every now and then, but my main goal is to spot invest on dollar cost averaging. But I have been using BITUNIX the last couple days, weeks actually, and yeah, I've been having fun with it, which is what I would recommend to anyone just getting started with this. Just get a feel for something first before you jump in and start trading big amounts of money and start losing big amounts of money. All right, so here we have limit and market. These are the two main ones you need to know about. Some have stop limits and whatever other trailing. The trailing stop is actually something different, but the limit and market orders are the two main ones. The one I recommend you to use is limit orders. Now, why limit orders over market orders? Like I said before, when we close that little window, market orders are basically the worst thing you can do as a trader. If you buy during a high volume moment such as this, and let's say you want to go long, the price is here, you press long, and in the time it takes to process, it jumps further down, or vice versa. It goes up and then it shoots back down. Then you immediately start with a bigger loss than that you needed to have. We don't want that. We want the sharpest fees. We want the sharpest entries. We want to guarantee we get our Bitcoin, in this case, for the price we want it, and not higher or lower if you're shorting. The limit order is a way to guarantee that you get what you pay for at the fee you want to pay it. And another benefit of that is we can also set prices in advance. We can sort of predict price movement, set a trade in advance, and wait for it for the candles basically to reach our entry. And once it hits, it will open and we will be in the trade. Now, once that happens, for the limit order, that is the ideal situation. Sometimes it will come right up to our entry and the price will reverse. So be it. You do not have to reach every trade. You don't want to overtrade. You only need a few of them to hit and start your move up or down and try to get some profit. You don't want to be chasing an entry. If a price goes up, and it never goes down and hits your entry for long, so be it. You have to be prepared to accept the loss, go to a different coin, different trade, different option. Just wait till your plan works, till your entry does get hit. There is a way to increase this though. Like I said, I like to spread my entries. So if we I'll just grab this horizontal line tool for now. Let's say we see Bitcoin price struggling here. Let's say we want to go long. If we do want to go long, I'm seeing some exhaustion on it. So what I would do is let's make them green. Let's maybe open our trade here and clone it. And let's maybe add another entry on this level. Clone it one more time. And maybe here. So we now have 3 entries. I will be posting these as trades in a little bit. But now we have 3 entries for our price to hit before we go further up for our long situation. And we can do the exact same thing on the short. So let's say we shoot a little bit more up and we reach this level. It's a bit confusing. I will make these yellow so we see them. This one's actually pretty spot on. So we actually have 2 entries here. We have one here and one here. And if the price shoots up, we go short here, we go short here. We could actually set another one there, but for this video's purposes, let's leave it at this. What this does is once our price, let's say for the long, it's hit here and it hits here, our price level will be basically here, our average entry level, and this will be the orientation point of our trade. So we go further down, our average price will be here, and it shoots up. If it shoots past this level, then we will be in profit. As opposed to just this position, this opens, and let's say we want to open a trade with in total $100. This be 33, 33, 33. Our average will be here, and over this will be in profit. If we open our entire $100 position here, and it moves here, we would still be at a loss. So you can sort of visualize why spreading your entries is a good thing. Yes, if it immediately shoots up, your profit will be more, but in an average position, if it goes down, you're also better protected. Now, do I recommend keep opening positions on the way down? No. Eventually, if you do lose, you have to accept your loss, put a stop loss around this, maybe a little bit below the last point. And if it breaks, it breaks. It's done. You have to be able to accept that loss as well. Don't start chasing trades, prices, keep YOLOing money in, especially with leverage. It's just it's too risky. You have to be able to cut some losses in order to make some profits. Now let's get rid of all these levels. All right, so we see the price stagnating here a little bit. I don't see a lot of selling power. So let's see if we can open, let's copy the price, open a limit order on that price. And let's open it with $5, just a small trade. And confirm. Okay, there's our limit order. That's our first one. And maybe let's open another one here. Copy price. Yep, limit order, 6x leverage, copy price. Open along for another $5. Confirm. And you know what? Let's add another one. Price. And another $5. Open long. Right, so now we have 3 positions open. You can see we came pretty close to it already. And the price is moving a little bit further down. Now let's wait till we hit this level. And this level, and this level. Maybe it'll happen in this video. I hope so. I'm not really expecting it to, but for the sake of the video, it's open. It's there. And also you can drag these on the chart if you want to move your entry a little bit. If you're a little bit off on copying the price, you can. And we can actually I kind of forgot to do one thing. Let's add the stop losses. And let's see. I'm fairly certain we can add these. Yeah. You just double click the trade, you open it. We can add take profits and stop losses. So let's add our take profit. Let's pick this candle. Let's see if we break that. Copy price. Let's add some take profits. So we go to take profit. Oh, it's not really limit. No, it's not really letting me copy it for some reason. So 70,562, 71,562. We want to do that. 71,562. Confirm. 71,562. So you can see here, limit will be triggered, estimated profit and loss. So if this trade works out, we make 8% on that. You get a little, what's it called? You get a little preview of what you would make. So triggered, it may result in the failure to close. Yep. So you can, so this is the, you can close the trade with the market trade as well, or a limit order as well. I personally, let's stick to the limit ones for this. This is something, if the price is very volatile and it hits your take profit, if it's in the market order, it'll close it immediately. If we stick to the limit orders, it will guarantee your best price. But it could also mean that sometimes you don't exactly get to hit the take profit, and it will start to go back down and you never get to your take profit point. So be aware that that is something that could happen. The open orders are shown here, by the way. Open orders, positions, open order positions. If a position is triggered, it starts to appear here. And considering these three are all on the same BTC chart, it will stack up here and it will show the average price on the chart. All right, so why it did not save it, I don't know. But let's just stick to it for now. 71562. I'm fairly certain that it will show up once it triggers, but let's add them. 71562. Now we do the same process for the stop loss. So if it goes below this red line, 68768, go to stop loss. 68768 stop loss. That's one. 68768. Oh, 768. Stop loss 68768. Now I did put these on market orders pretty much because if it does start to spike down and it hits your stop loss, I'd advise you to just close it. At that point, getting the best price doesn't really matter. You want to ensure you don't lose more. So the only downside is it's not showing the stop losses on the chart until you open the chart, until you open the trade. But also that doesn't really matter if it's not open yet. We know we set the right points, and yeah, that pretty much guarantees we will be in the safe side, on the safe side. This is actually a set and forget strategy now. I could leave this. Oh, I could leave this and just not watch the chart now. I can now do something else. Maybe it works out, maybe it doesn't. Now, I think we can all agree that we don't really do that. I'm sorry. Trading is a bit of like gambling. I'd like to see what my trade does. So I won't be monitoring it constantly, but yeah, sometimes I grab my phone, keep it open. It looks like we are moving down, so we'll start to hit my first entry. So yeah, I'm eager to see if we do get that. Maybe get the chart a little bigger. So yeah, we are actually pretty close. We are really, really close. Oh, another thing which I like to do actually, we see the different time frames here. 1 minute, 3 minute, 5 minute, 30, there's a lot of them. I mainly look at the daily. So it's 1 day. Now we can see a very big amount of volume here. Now with the candle of yesterday, we see we moved down. We started to move further down today and we bounced back up big, very big. And now we're seeing a little movement down on the lower, but overall today it's green. So it would say it's a bullish day. So we go to the 4 hour, which is also showing a lot of green movements. We're not at that resistance level yet. So I'd say personally, there's a little bit of margin left on that upside. So this is why I'd say go long, grab a little trade on the up, on the movement up. We go to the 1 hour. Only here it's little red, but we see all these little red candles here as well. So I'm not too worried that it will dip down completely or we break down further. I'm kind of hoping we hit this first entry we bounce. And on the 15-minute chart, it becomes a little more visually, but we've got confirmation on the higher time frames that today is a green day. We're moving up. We had big red movements yesterday, which is around here, and now theoretically I'd like to see us retest this level. Now looking at it, it's not going to be a straight line, but we did form a bit, like even here it's a little bit of a higher low, a little bit of a higher low, higher low, higher low, and I'm kind of hoping this situation will be similar. So let's say we hit this point, we go up to this candle, maybe there, and we close it again. We could leave it open longer term. In this situation, I wouldn't. This little trade I close, maybe around this position, I would leave open longer. And then if it's open, we can add more into the position. We can take more out of the position. We can change the leverage on it. We can add or take out more margin. I'm gonna try to do something which is actually a little bit against my personal belief, but let's open a very tiny trade on market because I want to show you one final option. Let's open long. I was worried about that. Can I open $1 at a 6x leverage? Yep. Can I open $2? Yep, I can. All right, so let's open it at, I don't know, like 2x leverage. Can we do that? So I can't do that yet. All right, let's stick to the $2, open long on the market. So normally I'd say never do this. Never open a market order. So at $2 at the 6x leverage with minus the fees, trading fees, we have now a position open of $7.10. And it's in a tiny profit. This is how your trade looks once it's open. Now we have a few options here. The TPSL. So they appear now on the chart. Just now I can show you what I wanted to do. We can drag this take profit up to where we want it. Success. So now we have the take profit. And our stop loss can be somewhere around here. I don't know why it's not working with me, but anyways, now we have the stop loss set, the take profit set, and if we wanted to, we can open even more. So the general take profit you said will close the entire position. We can edit this because you can see here TPSL close long. We can modify it. We can edit the price. We can edit the stop loss price. Plenty of options to do so. But let's get back to the position. So that's where we can add our TP and SL. Reverse. See, it even has descriptions on it, so that makes it a little bit easier. But it will be closed at the market price and opened in reverse. We do this if we have a long open, and all of a sudden some negative news comes out, or the price starts really reversing, and we want to get out of it, or we think the market will reverse and we want to catch the other wave. It will open the exact same trade, only the other direction. So this is something you could do. A flash close, if basically a panic button, if you think, oh crap, I want to get out of this right now, but click it, done, closed. The same here. We can normally close, we can say we want to close 50% at market or at the last price of whatever we want. Also another option to take some profit, get some cash out without closing the entire trade. Then we have another button right here, adjust leverage. So yeah, the maximum openings are limited by leverage, available funds, and open position quantity. So you need, you need the funds to cover the leverage. But other than that, you could, in theory, completely blow up this trade and try to gain massive profits. I wouldn't recommend doing this because even at a 10x leverage, if the price moves 1%, it moves 10% for you. And in crypto, 1 to 10% movements are pretty regular on a daily basis. And if you open with 125x leverage, it's guaranteed to start blowing your account eventually. But you can adjust this here. You can up it a little bit, or you can also lower it a little bit. If you lower it, you will have to put in more margin. If you up it, you can take out some margin. So you get a little bit more free funds. Also, if you're up quite a bit, you can take out some funds and the trade will stay open, but you will have secured a little bit of profit. And here we have the margin adjust button, increase margin or reduce margin. So current position, $1.1, max increase, which is my maximum available balance at this point. Or, and this would be the liquidation price after the adjustment. So if we put in all that money, it will liquidate at around 60 USDT. And reduce margin as well. So at this point, the price has not moved enough, so I cannot take any margin out. But if you want to, you can do this here. So as you see, we're now dropping below my entry, my market entry. What's also important to note is that I opened with $2 and I only have $1.1 if I close the trade now, or even a little bit less here. But my margin in this trade is actually almost one, let's say 1.2. This is because we paid 80 cents in fee, and usually it's a percentage. And with a market order, that percentage is fluid. So if it's really busy, a lot of people opening trades, that percentage can increase massively. And if you're not aware of this, it can cost you a lot of money, both on opening and closing a trade. So be very careful with that. That's why I say always use limit orders. Limit orders guarantee you the lowest fees which they offer on their exchange. And it's just, in general, it's a better idea to do this. Now, let's say I want to close this trade completely. I've had enough. I don't want to lose more money. I don't want to wait for my stop loss. It's not reversing fast enough for me. And let's say we flash close. It looks like it's going to go further down as well. So let's click flash close. Close your BTUSDT. Perpetual long position with market order will be cancelled before the position closing below. Confirm. And it's done. We get our little ring noise. And basically, we still have our other positions open, but we have closed our loss on the first position. So as you can see, this actually makes us very versatile. We can open some trades, we can close them, we can take micro profits, have our longer swing trades open. There's a lot of strategies to do this. There's no right way or wrong way, actually. Obviously, if you lose money on it, I wouldn't keep doing it, but there is plenty of opportunities to form your own strategy on this. And the way I like to do it with these spread entries is like to predict these bottoms. It's not showing my last trade. It is. So this is actually a very good example. So I bought a little bit on here. Around this time, I was sadly not at my computer because I might have added one more position here. But yeah, like I said, I don't always monitor it. monitor my trades, so I should have in this case, but it didn't. But I waited it out. My stop loss was somewhere around here. I don't entirely remember, but it was a bit lower. It didn't reach my stop loss, but as you can see, we moved up. And I ended up selling here. So spread my entries. Remember, this is 15 minutes, so this is only in the span of a few days. We went down, we started going up, and I kept my trade open for longer. I wanted to close here, but I figured let's keep it open for a little bit. It went down, it went back up. I closed here, and we saw this. Sadly, I was not trading at this point either because I'm pretty busy lately, so I didn't catch this one, but it's a similar situation. Only then it shot up even more. So that would have been an amazing trade, but sadly we cannot have it all. But as you can see, it looks like we will be hitting these entries as well. Now, will we be breaking through this level? If we do, I would definitely close it, take a stop loss, or set my stop loss like we did, because I'm fairly certain it would shoot so far down. It would take ages before I'd be even close to making a profit again. And it's better just to cut some loss to come back stronger on the next trade. Like I said, don't be dedicated to your one trade. There's so many other opportunities. Take the loss and go for another win. All right, so this I will conclude the video here. If you have any questions, please feel free to ask them in the comments below. If you can, leave a like, possibly a subscribe. You will help me out tremendously, especially since I'm a beginner on YouTube. Yeah, like I said, any questions, feel free to ask. Any discussions, any improvements on my strategy, feel free to let me know. And let's see each other on the next one. Thanks for watching, guys.